Welcome to the deep dive.
Great to be here.
Today, we're plunging into a world it's fascinated humanity for millennia, hasn't it?
Absolutely. Gold.
Gold. And it remains incredibly relevant. You've brought us a stack of sources covering pretty much everything from ancient history right up to cutting-edge digital investment.
Yeah, there's a lot to unpack.
So our mission is clear. Let's unpack that enduring appeal, explore the myriad ways you can engage with it as an investor.
And understand why it might actually matter for you.
Exactly. Think of this as your shortcut, maybe, to seeing gold in a whole new light.
Definitely. We're going beyond just the shine.
Yeah.
Looking at it as a complex asset
The deep historical roots.
and a surprisingly dynamic future in finance.
Okay, let's jump right in then. The sources really emphasize that gold it's far more than just a relic or decoration.
Oh, much more. It's been vital for ages.
A cornerstone for wealth preservation, huge cultural meaning, financial security.
Across so many civilizations.
Yeah.
And what's fascinating is how those ancient properties translate into, well, very practical benefits today.
For investors.
For investors. The sources frame it as several tools in one, almost. A shield against inflation.
Right.
A refuge in crises.
Okay.
And a ballast for your portfolio. All in one package, sort of.
Let's break that down. How does it work as a shield against inflation?
Well, historically, when the purchasing power of, say, the dollar declines, high inflation gold prices tend to rise.
So it holds its value when money's losing its.
That's the idea, yeah.
And the sources give that really striking example from the 1970s. People saw everyday costs just soaring, and gold prices, surged right along with it.
Exactly, helping those who held it protect their wealth.
Okay, and then the safe haven aspect.
Right, so during times of geopolitical uncertainty or economic turmoil.
Like when stock markets get volatile.
Precisely, or are tumbling.
Yeah.
Investors often, they seek out the perceived safety of gold.
Like 2008, the financial crisis.
That's a key example. As investors got anxious, fled riskier assets.
Stocks, mainly.
Stocks, yeah. Gold prices climbed significantly. It's seen as reliable when the rest of the financial world feels unstable.
And it's not just about defense, is it? The sources also talk about strengthening your overall portfolio.
Through diversification, yeah. That's crucial. Gold tends to have a low correlation with traditional assets.
Like stocks and bonds.
Exactly. Which means its price often moves differently.
So if stocks go down, gold might go up, or at least not fall as much.
That's often the case. So adding some gold can help reduce your portfolio's overall risk. Not all your eggs are in one basket, moving the same way.
And the sources mention studies about how much to hold.
Yeah, they point to research suggesting that even a relatively small amount, maybe 5% to 10%, can potentially enhance overall returns while reducing volatility.
Protection, safety, and potentially better returns. That's quite a combo.
It is. Plus, there's that other quality, it's tangible.
Right. You can actually hold it, unlike a number on a screen.
And for many people, that provides a powerful psychological comfort.
You mean just knowing it's there?
Exactly. The sources mention an investor story, feeling huge anxiety during a market downturn. But knowing they held physical gold, something real, apparently brought a sense of peace.
Helped them avoid panic selling other things.
That's what was reported, yeah. Prevented rash decisions.
So these very real financial uses today, but they're rooted deep in its history, aren't they?
Oh, absolutely. It's been a cultural symbol for, forever.
You think about ancient Egypt.
Right. Crafting gold for pharaohs' tombs, symbols of power. Or Roman nobility, dripping in gold jewelry to show status.
It wasn't just about money, then.
Not at all. It was woven into the fabric of civilizations. Wealth, power, permanence.
And it even served as a fundamental standard of value itself.
For centuries, yeah. A preferred medium of exchange. Made trade easier across cultures.
And then the gold standard, later on.
The adoption of the gold standard, late 19th century, really cemented that. Linking currencies directly to gold reserves underpinned global finance for decades.
This history just screams resilience, doesn't it?
It really does. The sources track it through huge upheavals,
Depression,
global conflicts.
recent recessions.
It's consistently held value through crises, proven its mettle.
And it's not just history or investment, is it? It has modern uses, too.
Vital modern uses that keep demand going. Its conductivity, resistance to corrosion.
Makes it crucial for tech.
Indispensable. Electronics, aerospace, even medical tech.
So The device you might be listening on right now probably has some gold in it.
A tiny bit, most likely, yeah.
Wow. And to bring that historical impact home, the sources mention the gold rush.
The 19th century gold rush, yeah.
Yeah.
That wasn't just a few prospectors.
It was massive.
A societal phenomena.
Yeah.
Reshaped economies, communities. The sheer excitement, the lure of striking it rich.
Drew people across continents.
Absolutely. Shows gold's power to drive human behavior, transform landscapes. It's potent stuff.
So when you pull all this together, the history, resilience, the practical financial side today, what does it mean for you, the listener?
Why should you care about gold as part of your strategy?
It feels like its ancient role, that reliable store of value, might be more relevant than ever in our, well, complex and sometimes turbulent world.
Understanding that foundation is key, I think. It explains the why.
Before we even get to the how.
Exactly.
Right. And speaking of how, you might be thinking, okay, I get why gold's important, but how do I actually do it? How do I invest?
Good question. The sources lay out the main paths, starting with the most traditional.
Which is
Buying physical gold, coins, bars.
the classic route.
Okay.
Oldest, most direct method.
Yep. Gives you that tangible connection many investors like.
So why choose physical? What are the main pulls?
Well, beyond that comfort of holding it.
The tangibility.
Right. It offers direct protection against economic uncertainty,
Right.
currency losing value, and while it might take time to sell,
It's not instant like stocks.
no, but it is universally recognized.
Yeah.
You can usually convert it to cash eventually. It provides a form of liquidity.
And what forms does it usually come in?
Most common are gold coins, like the American Gold Eagle, Canadian Maple Leaf.
Instantly recognizable.
Yeah, easy to trade.
Yeah.
Though they usually have a premium over the actual gold value.
A markup for the coin itself.
Exactly.
Yeah.
Then for maybe more serious wealth storage, you have gold bars.
Bigger investors might prefer those.
Often, yeah. Potentially lower premium per ounce. But bigger bars can be harder to sell in bits unless they're from top-tier refiner.
And jewelry.
Jewelry's tricky. It's beautiful, holds some value.
But you're paying for the craftsmanship too.
A lot, usually.
Mm.
So the markup on the actual gold content can be significant, less of a pure investment play.
Okay, so before you rush out and buy, there are practical things to think about.
Definitely. Secure storage is crucial.
Like a bank safety deposit box. Or a really good home safe.
Those are the main options, yeah.
Mm.
And authenticity is vital.
Gotta make sure it's real.
Absolutely. Buying from reputable dealers is key. Certified items help with resale value, too.
And be realistic about liquidity.
Yeah. It's valuable, but turning physical gold into cash quickly isn't always straightforward. You need to find a buyer.
The sources had a nice comparison here, didn't they?
They did. Contrasting someone new, maybe buying a few coins.
For a collection. Or just starting out.
All right. Versus a seasoned investor buying larger bars purely for wealth storage. That second person is thinking much more about secure storage and how they'd sell later.
Makes sense. Okay, that's physical gold. The other big traditional path is gold ETFs.
Exchange-traded funds.
Yep.
Yeah,
This sounds more modern.
it is. Highly convenient. Instead of holding the metal, you buy shares in a fund.
And the fund holds the gold.
The fund holds the gold in a vault, usually on behalf of investors. It gives you exposure to the gold price without the physical hassles.
So what are the main benefits here? Why go ETF?
Convenience and accessibility are huge. You buy and sell shares instantly on stock exchanges,
Just like stocks.
just like stocks, all day long. So excellent liquidity and generally lower overall costs than physical,
No storage fees, lower premiums.
right? You avoid those extras
How do you actually buy them?
for a standard brokerage account. Pretty straightforward. But it's important to research the funds first.
They're not all the same.
No. The sources point that out. Some are physically backed. They actually hold bullion.
Like the ones you mentioned. GLD, IA.
Oh, exactly. SPDR, gold shares, GLD. iShares Gold Trust, IAU, are big ones. Others might invest in gold mining companies.
Like GDX, Vanek Vector's gold miners.
That's a popular one for mining exposure, yeah. Or some might use derivatives. So you need to know what you're buying.
And check the fees.
Definitely.
Yeah.
Management fees, the expense ratio. And while past performance isn't a guarantee,
It doesn't predict the future.
right, it still gives you some context.
Okay, so what are the main downsides or things to consider with ETFs?
Well, you're still exposed to market risks. The ETF price tracks the gold price, which is affected by volatility, interest rates, geopolitics,
It's like physical gold.
just like physical gold. And the crucial point, no physical ownership.
You own shares representing gold.
Correct. You can't hold the metal. For some, that removes the tangible security they want, especially in extreme situations.
And the sources had an example for this too.
Yeah, described an active trader using gold ETFs specifically to hedge against stock market dips.
Because they're easy to trade.
Easy to trade, very liquid.
Hmm.
But that same investor might also keep some physical gold tucked away.
For that long-term tangible security blanket.
Exactly. A layered approach.
So the traditional routes offer that bedrock physical security or the modern convenience of funds.
Pretty much sums it up.
But the sources show the gold landscape has really expanded, hasn't it? Let's look at some less common, maybe more dynamic approaches.
Yeah, this is where we go beyond the basics. Innovative strategies, unconventional methods. They offer unique opportunities depending on your goals.
And your risk tolerance, I imagine.
Definitely that too.
Okay, a key one mentioned is diversifying with gold mining stocks.
Right. So this isn't buying gold itself. You're investing in the companies digging it out of the ground.
Buying shares in the business.
Exactly. It gives you exposure, but it's often leveraged exposure.
What does that mean?
Well, if the price of gold goes up, these mining companies' profit margins can widen significantly. So their stock price might potentially increase by a larger percentage than the gold price itself.
Ah, okay. Bigger potential upside, maybe?
Potentially, yes,
Hmm.
but also potentially more volatility.
What are other benefits?
Well, many established mining companies pay dividends.
So you could get regular income.
Potential for regular income, yeah,
Yeah.
alongside any share price increase. Plus, there's operational growth potential.
Like if they find a big new gold deposit.
Exactly. Or they develop new tech that cuts their extraction costs, makes them more efficient, more profitable.
But choosing these stocks sounds like evaluating a business, not just tracking gold.
That's absolutely right. You need to dig into the company's financials.
Profitability, debt levels,
Cash flow, definitely. Management expertise is critical. Do they have a good track record?
and where their mines are located matters.
Hugely. Geographic diversification reduces risks tied to one country. You need to consider regulations, political stability, production costs in those regions.
The sources gave a couple of examples, I think.
Yeah, investing in a major like Barrick Gold could offer that mix of gold price exposure and potential dividends.
Right.
They also mentioned someone investing in a sustainable mining company.
Ah, linking into ethics.
Exactly. It performed well, but also attracted investors, specifically because of its commitment to ethical practices. Shows how values can align with potential.
Interesting. Okay, moving into even more dynamic territory.
Yeah.
Gold options trading.
Right. This is quite different.
Seems complex.
It can be. Options trading lets you speculate on the future price of gold
Without actually buying it.
without buying the physical asset or ETF shares directly, yeah.
How does that work?
Yeah.
Simply.
Well, the basics are call options and put options. A call gives you the right, not the obligation, to buy gold at a set price by a certain date.
You do that if you think the price is going up.
Exactly.
Yeah.
And you only put up a fraction of the capital needed to buy the gold itself. A put option gives you the right to sell at a set price by a date.
So that's for hedging if you think the price might fall.
Hmm.
Or profiting from a drop.
Both, yeah.
What are the advantages of using options?
Flexibility is a big one. Hedging, speculating, lower initial capital needed compared to buying the asset itself.
Leverage.
That allows for leverage gains, yes. You can potentially control a larger value of gold than your investment. And they're a specific tool for risk management.
But what are the catches? The things to watch out for?
Expiration dates are crucial. Timing is everything. If the price doesn't move your way by expiry.
The option can become worthless.
Can expire worthless? Yes. Volatility is a double-edged sword. It impacts option prices, but can lead to rapid losses if the market moves against you.
And you really need to understand how they're priced.
Definitely. It involves factors like implied volatility, time decay. It's not just about the gold price direction. It requires some learning.
The sources had an illustration for this.
Yeah, an investor buying a call option, betting on a price surge, if right, big profit potential, risking only the option cost.
And if wrong?
Maximum loss is just that initial premium paid for the option. So defined risk in that sense.
Okay. So traditional assets, funds, dynamic stocks, options, quite a range. But the sources also introduced really unconventional, tech-driven methods.
Like peer-to-peer gold lending and digital gold.
Yeah.
Very modern approaches.
P2P gold lending. Sounds intriguing. Lending out your gold.
Essentially, yeah.
Yeah.
You can potentially earn a return on physical gold you own without selling it. You lend it via a platform.
An online platform.
Usually, yes, to borrowers who use their own gold as collateral.
How does that actually work?
Okay, so you, the lender, agree to lend some gold. The borrower puts up their gold as security.
And the gold is held somewhere safe.
Crucially, yes. Both Lots of gold are typically stored securely by an independent third party, like a vaulting service.
And the lender earns interest.
Earns interest, paid in cash or sometimes even more gold. When the borrower repays the loan, you get your original gold back.
And the borrower gets cash without selling their gold.
Exactly. Access to liquidity while keeping their asset.
What are the upsides for the lender?
Potential passive income on an asset that might just be sitting there.
In a safe or vault.
Right. You're leveraging your assets, earning interest while still owning the gold and benefiting if its price goes up. For borrowers, it can mean wider access to finance, maybe quicker or different terms than banks.
But what are the risks? Sounds like there must be some.
There are. Credit risk is the main one. The borrower might default.
Even with collateral.
Even with collateral.
Yeah.
You need to understand how the platform vets borrowers and handles the collateral, especially if gold prices fall, reducing its value.
Platform risk too. Trusting the website.
Absolutely. You need to research the platform itself thoroughly. And market fluctuations always play a role, affecting collateral value.
The sources shared a story about this.
Yeah, a friend needing quick cash for a business used a P2P platform. Lent some gold they had stored away.
Got the cash, earned interest.
Exactly. Put an idle asset to work.
Fascinating. Okay, and finally, digital gold. This feels like the ultimate modern spin.
It really is. Digital gold lets you buy ownership of real, physical gold.
So the gold actually exists somewhere.
Yes, stored securely in professional vaults, but your ownership is represented digitally on a platform.
And you can buy small amounts.
That's a key benefit, fractional ownership, often very small amounts, lowering the entry barrier.
So what are the main advantages? Why digital gold?
Ease of use is number one. Buy, sell with a few clicks, online or via app.
Okay.
Fractional ownership makes it accessible. No storage hassles, that's handled by the provider.
No need for a safer vault yourself.
Nope. And generally good liquidity. You can usually convert back to cash or sometimes even redeem for physical delivery relatively easily via the platform.
How do you get started?
Choose a reputable platform. Sources mentioned Gold Money, Vaulted, Paytm Gold in some regions.
Do your research.
Definitely. Create an account, link payment, make your purchase, monitor it online.
Considerations before jumping in.
Platform trustworthiness is critical. You're relying on them to hold the actual gold backing your digital claim.
Right. Due diligence needed.
For sure.
Yeah.
Price volatility still applies. It tracks the market gold price. And of course, no tangible possession.
Which matters to some people.
For those who value holding the physical asset, that's a drawback.
The sources had a practical example here too.
Yeah, an acquaintance with a minimalist lifestyle. Digital gold appealed because it avoided clutter, storage issues, but still gave gold exposure.
Fit their lifestyle.
Perfectly.
It's just incredible how diverse this gold investment world has become. Ancient metal to bits on a screen.
It really has evolved.
So thinking about your own financial picture, your goals, your comfort with tech or complexity, which of these options starts to resonate? It's definitely not one size fits all anymore.
Absolutely not. And it's still evolving. The sources highlight two big trends shaping its future.
Okay, what are those?
First, the ongoing impact of digitalization. Technology just keeps pushing it forward.
Making it easier, faster.
Faster, cheaper, much more accessible. We're seeing slicker online platforms, real-time data, global access.
Mobile apps for managing on the go.
User-friendly mobile apps, yeah. Digital gold storage we just talked about. And the sources even hint at integration with cryptocurrencies.
Wow, really?
Potential for new diversification avenues there down the line.
That convenience factor must be huge, especially for newcomers.
It is. The sources contrast that frictionless online experience with the old way of finding dealers, arranging storage.
You want more effort.
Much more. This ease of entry really appeals to younger investors, beginners, people who might have found the old ways intimidating.
And the apps often have educational stuff too.
Many do, yeah. Helping novices feel more empowered, build confidence.
Any hints about what's next in digitalization for gold?
Sources suggest maybe AI, data analytics playing a bigger role, helping analyze trends, maybe predict movements.
Interesting.
And continued security improvements for digital assets will be vital for trust.
Okay, so digitalization is one big trend. What's the second?
A growing focus on sustainability and ethical gold investing.
I think reflecting a broader shift in values, right?
Exactly. Investors are looking beyond just profit. Traditional mining can have significant environmental impacts.
Habitat damage, water pollution.
Right. So there's more attention on companies prioritizing sustainable practices, minimizing their footprint.
And it's not just environment, it's social too.
Yes. Ethical investing considers the impact on local communities near mines, fair labor, safe conditions, community welfare.
Are there ways to know if gold is ethical?
Standards are emerging. Certifications for responsible sourcing, helping identify gold produced under better conditions. Sources mention CSR too.
Corporate social responsibility.
Right. Investors are actively looking for companies with strong CSR track records.
So how can you, as an investor, act on this if you care about it?
You can research companies' sustainability reports, their CSR efforts. Look for investment funds that specifically focus on ethical mining,
ESG funds, maybe?
funds with an ESG, environmental, social governance focus, yeah. Or choose certified gold products that guarantee responsible sourcing.
There was an example for this, too.
A colleague who shifted investments towards ethical miners. Felt better about it, but also saw long-term potential as sustainability gains traction.
And who's driving this demand?
Sources point particularly to younger generations, millennials, Gen Z,
They want investments aligned with values.
often strongly, yes.
Yeah.
As their wealth grows, their influence will push the industry further in this direction. Ethics and sustainability become bigger factors.
So the future seems shaped by tech making it easier.
And values demanding it be done better, more responsibly.
Two powerful forces transforming the landscape.
Definitely. Offering new tools, but also a chance to align finance with values.
Okay, we have covered a lot of ground in this deep dive.
We certainly have.
We started with gold's enduring significance hedge, safe haven, diversifier, tangible asset, rooted in history, still relevant.
Then the traditional paths, physical gold with its tangibility,
When storage needs.
and gold ETFs for convenience and liquidity.
Then we went beyond basics. Mining stocks for that leveraged exposure.
Options trading for speculating or hedging.
And those really modern methods, P2P lending and digital gold, driven by tech.
And finally, the future trends. Digitalization, making it all more accessible.
And the growing importance of sustainability and ethics.
Yeah, the big takeaway from the sources seems to be gold's fundamental value proposition, remarkably consistent.
So, well, yeah.
But the ways you can invest in it, rapidly expanding, evolving, thanks to tech and changing values.
And the sources really hammer home that your approach needs to be tailored.
Absolutely. No single right way. Depends entirely on your goals, your risk tolerance, your time frame.
The good news being there's probably an option out there now that fits almost any investor profile.
Seems that way. And the source material leaves us with a final thought,
Mm.
suggesting this golden age isn't just about profit anymore.
It's about mindful decisions,
Yeah.
responsible stewardship,
That's the idea.
which leaves us, and you, pondering. As tech makes gold easier than ever to access, how do you balance that desire for gain with the growing call for ethical investing?
And how will these powerful future trends, digitalization and sustainability, ultimately shape gold's role, not just in finance, but in your responsible portfolio?
Something to think about.